Hello, good morning, Ara. I am considering entering the Korean market with my business, but could you explain the difference to me between setting up a branch office or a subsidiary?
Sure, I'm happy to help you understand the key differences between these two popular options for entering Korean market. Let's start with a branch office. A foreign branch office is essentially an extension of your parent company, established outside of Korea. It is not a separate entity, and its accounting data is integrated with the head office as if they were one entity. Many businesses favor this option initially because it doesn't require any minimum capital amount for paperwork, which can ease the financial burden when starting out. However, it is important to note that there are several disadvantages to this approach. According to Korean tax law, a foreign branch office is considered a foreign company, which means it is not considered or classified as a small and medium-sized enterprise, regardless of its revenue volume or payroll size. This classification is crucial because SMEs in Korea enjoy various tax benefits and concessions that are not available to foreign branch offices. For instance, there's 50% of corporate income tax cut for startups and a 10% or up to 20% special corporate income tax reduction for small size and medium size enterprises. Additionally, employees under the age of 34 typically receives a tax reduction of up to 2 million Korean won per year when working at SMEs, but this benefit is not available if they work at a foreign branch office. These factors can make it more challenging to attract young talent to your company.
I see, that's quite a lot to consider. Are there any specific industries or business types that might benefit from having a branch office structure despite these disadvantages?
That's a good question. While the tax disadvantages of a branch office are significant, there are certain situations where it will still be preferable. For instance, companies in industries with high regulatory oversight, such as banking or insurance financial sectors, may find a branch office structure more suitable initially. This is because it allows the parent company to maintain more direct control and potentially leverage its global reputation more easily. Additionally, businesses that are testing the Korean market and aren't sure about their long-term commitment might prefer a branch office for its relative ease of setup and potential for simpler exit if needed. However, it is important to note that disadvantages are often outweighed by the tax benefit of a subsidiary for more businesses or most businesses, especially as they grow and establish themselves in the market.
I see, so what about setting up a subsidiary instead?
A subsidiary, on the other hand, offers several advantages that might be more suitable for your needs. A subsidiary is a separate legal entity from its parent company, maintaining entirely distinct accounting data and even having the ability to conduct different business activities from its parent company. The key benefit here is that a subsidiary is treated the same as a Korean-owned local incorporated company, which means all tax benefits targeting SME apply to it. This can result in significant tax savings and make it easier to attract and retain local talents. It is worth noting that if the subsidiary is owned by foreign investors who hold more than 10% of the shareholdings and have a minimum of 100 million Korean won in paid-in capital, it is eligible for a foreign direct investment certificate. However, the tax benefits for a subsidiary with or without an FDI certificate are almost identical. So, if your primary goal is to maximize tax benefits in Korea, there's no need to inject 100 million Korean won when establishing a new subsidiary as a foreign investor. Given the information you provided about your business goals, a subsidiary might be a better option for you, considering the tax benefits and flexibility that it offers. However, I would strongly recommend considering all aspects of your business plan, including long-term growth strategies, operational flexibilities, and potential exit strategies before making a final decision. Each business is unique, and what works best for one company may not be ideal for another.
Thank you so much for this very detailed breakdown. It will be really helpful when we plan our entry into the Korean market.
You're welcome, Marie. I'm glad I could provide you with a thorough overview of your opinions. Remember, entering a new market is a complex process with many factors to consider beyond just the tax implications. If you have any more questions as you move forward with your plans, whether about tax structures or any other aspects of setting up your business in Korea, please don't hesitate to ask. Good luck with your plan and expansion plans here in Korea.
Thank you, Ara. See you next time. Bye.